This week's winner, Biotech, continuing its white-hot comeback. This week's loser, anyone still waiting for AI infrastructure to carry the whole market.
And with two PE-backed consumer names testing a sector that's been benched all year, the question is simple. Is the consumer IPO finally back? Let's get into it with this week's winners and losers.
Welcome to the IPO Winners and Losers podcast. I'm your host, Avery Marquez, Renaissance Capital's Director of Investment Strategies.
And I'm Matt Kennedy, Senior Strategist at Renaissance Capital. And Avery, I kind of feel like a loser myself today because I've got a cold. So hopefully it doesn't mess with the sound quality.
No, it's a little bit lower, so very
Oh, okay.
radio-esque.
Oh, nice.
Mhm. So a quick note before we dive in, this podcast is for informational purposes only, and nothing we discuss should be taken as investment advice or recommendation to buy, sell, or hold any security. Past performance does not guarantee future results, and one cannot invest directly in an index. For the full disclosure, check the end of this recording. So let's walk through the week because the headline isn't what priced, it's what's coming. We had just one IPO this past week, so fairly quiet on paper, but the setup for next week is the story. We have the consumer sector poised for a real return.
Yeah, two PE-backed consumer discretionary names, Jersey Mike's and Reformation. The consumer sector has taken a backseat for most of 2026. The names that did go public didn't do especially well. But for investors that are worried about AI disruption, or they just like these brands, or want a company without an insane amount of CapEx, these two can offer that investment opportunity. And if they do well, I think more consumer IPOs will certainly line up.
hmm Yeah, these are going to be really telling. But that said, the tape is still soft. The IPO index ended the week with a loss, lagging the S&P 500. So growth losing more steam on AI concerns and the Iran war.
Right, so a fragile backdrop, but issuers stepping into it anyway. That's the key tension.
Mhm. So let's look to the calendar, and we can start with a name everyone should know, Jersey Mike's. It's that Blackstone-backed sandwich chain gearing up to raise $1 billion. That would make it the largest consumer IPO in more than 2 years.
That $8.9 billion valuation, though, pretty ambitious given how restaurant stocks have traded this year. The popularity is undeniable, but the valuation is the debate.
And the pitch here is global expansion. This company has a big base in the US. It's also building a small footprint in Canada, but it's planning to open its first UK locations later this year. The issue is that it's priced like the expansion has already worked. They're asking investors to put a good amount of faith in the growth story.
Yeah, I think the company can achieve a premium EBITDA multiple. I'm just a little hesitant to say it deserves it right off the bat. The leverage also increases the risk here a bit, but it's definitely an important deal. This is an IPO with an audience, namely every restaurant IPO in the pipeline. That includes Inspire Brands, the owner of Jimmy John's, Dunkin', and Arby's. You've also got Panera Brands, maybe even PF Chang's, Cooper's Hawk, and Joe and the Juice, though those three kind of seem further away. All of them watching this print.
Yeah, I think Inspire Brands is definitely a big one.
Hmm.
Duncan. I know when I like Inspire Brands, I have no idea who
Yeah.
that is. And then I see that they own Duncan, it's like, oh, okay.
Yeah.
But yeah, Jersey Mike's may be just a sandwich chain to some, but to the IPO pipeline, it's going to be the read on whether the whole restaurant category can come public again. And I have a very serious question for you, Matt.
Oh,
What is your go-to sandwich order?
Avery, I'm a man of simple tastes. My go-to sandwich is just plain white bread slathered in mayonnaise.
Wow.
No, just kidding, just kidding. I go for the Italian. It's kind
Yeah,
of
okay.
boring, but the
No, I
the
think
Italian is
Italian's
my
great.
go-to. Yeah, it's so good.
Yeah, no, that's classic. I think I was going to say the same thing.
The meatball is
Um,
pretty good too. I do like a
mm,
good meatball, but yeah, can't go wrong with the Italian.
mhm. So, thinking about consumer more broadly, there's another big note here, the return of a category we haven't seen in years. Premier-backed Reformation would be the market's first DTC company in years. And that's notable, especially given how big the DTC craze was back between 2019 and 2021.
Yeah, the profile here is just classic DTC. You've got above average growth, below average EBITDA margins. So growth for margin, the trade-off investors keep relitigating.
Mhm. And per the newsletter, the roadshow was edgy. So make of that what you will.
Yeah, I did watch it. I think they made fun of CFOs named Brad, so I can imagine a lot of finance bros and vests were offended. But then they had a model in a bubble bath talking about their growth kangaroo, so I bet a lot of finance bros were intrigued. The marketing is kind of strange. It's a it's a strange juxtaposition for a private equity-backed company. They're doing a dividend recap and a synthetic secondary, and at the same time, they're talking about being this authentic, cool girl brand. It's interesting, but I think the growth and the gross margin are really the story here. They say they don't do much discounting, which investors like, but the EBITDA margin is kind of surprisingly low given that 60% plus gross margin. This company has been around for a while, but a lot of those 2021 DTC brand IPOs didn't really pan out. So we'll see if that weighs in the deal. At the end of the day, though, IPO buyers care more about those fundamentals than the cool girl vibe.
Yeah, I think that's the big point here. It's like, yeah, it makes me think back to 2021 when it was
Yeah.
like all the prospectuses, they had the color coding and the pretty font, and
Mhm.
um, yeah, investors I think don't care about that, especially right now.
Yeah, they had
But
to do
if
something really splashy to stand out back then. This kind of reminds me of that
Mhm.
too, yeah.
Yeah. But I think if a DTC name can make it to market and do well, it would reopen a door that's been shut for a pretty long time.
Yeah.
Mhm. So, as we've said several times over the past few weeks, AI infrastructure has cooled, but listings in this space are down, not out. We have Ionic Digital on for next week. This company was recently valued at $2.4 billion, so this would be the largest direct listing since 2021.
Yeah, the mechanism is the story here. A direct listing, not a capital raise. It's a Bitcoin miner pivoting to data center leasing.
Yeah, it's a pivot that has started to become a trend, not really an exception. Several miners have repurposed their power and infrastructure for the AI wave, and that should probably continue as companies sprint to capitalize on compute demand.
Yeah, I'll call it smart adjacency. You already have the power draw and the real estate. Data centers need both. I think I was asked this week if this was kind of like the Allbirds pivot, and I said no. There's a real business here. They've got that signed $2 billion lease agreement with Nscale, and they recently raised 400 million from institutional investors. JP Morgan is the financial advisor on the direct listing, so big name there.
Hmm. Yeah, it's funny. Allbirds, one of those crazy DTC names, and
Yeah, exactly. Oh, there's good tie-in.
yeah.
Yeah.
Hmm. So yeah, let's talk about the actual print this week now, because biotech quietly keeps delivering. We had just one IPO, Scribe Therapeutics. This company upsized, priced at the $15 high end, and then popped 44%. This company's pretty early stage, and it's doing gene silencing for cardiovascular and metabolic diseases. But the real thing is its main focus, which is high cholesterol. So a huge end market.
Right, and here's the nuance. It priced at a more than 50% discount to its last private round in 2021. So it's a great debut off of a reset valuation.
Yeah, and there's a strategic tell in this deal. IPO investments from Eli Lilly and Sanofi. That's a potential M&A angle sitting right there in a year that's been huge for acquisitions in this space.
Right, such an important pattern here. This year's biotech IPOs now average a more than 60% return from offer. That kind of scoreboard pulls the pipeline forward.
Yeah, and there's six more biotechs waiting in the pipeline.
Mhm.
So with returns like that, we expect them to move.
Yeah.
Yeah, and now to the scoreboard for existing new stocks. It was another down week, but there was movement underneath. The IPO index ended the week off 2.5% compared to the S&P, which was off 0.6%. So new stocks are slipping, and growth is the reason. It's kind of pinned on these AI concerns plus the Iran war.
Yeah, looking under the hood a bit, Tempest AI was the week's IPO index loser, off almost 19% on a deal to buy the diagnostics firm Personalis. M&A not always rewarded right now.
And on the other side, we had equipmentshare.com, which rebounded 17% after raising 2026 guidance. So we're starting to see that fundamentals are still getting attention, and good numbers can translate to gains.
So it's not a blanket risk off, it's discriminating. Raise guidance, you're rewarded. Buy growth into uncertainty, you're not.
Hmm. So zooming out now, what's this whole setup actually telling us? The story is broadening. Biotech's been working, and now consumer is stepping off the bench to test the breadth.
But into some fragility too. The IPO index down on the week, growth wobbling on AI and Iran. Issuers are moving despite the tape, not because of it.
Yeah, that's an important read. We have Jersey Mike's, Reformation, Ionic, three names in what have been less than favored categories, all making an attempt at once.
So the risk is probably the timing here. A shaky backdrop is a hard window for a billion-dollar restaurant deal or the first DTC name in years.
But if they clear, it says the market's deeper than the index suggests. That's the bet these issuers are making.
Right, and the IPO index is still beating the S&P 500 year to date, even if new stocks have come down from their recent highs.
Mhm. All right, so what are we watching next week? First off, Jersey Mike's above everything, the largest consumer deal in 2 years, and the read for the entire restaurant pipeline behind it.
And then Reformation's pricing and trading. Can a DTC name clear into this tape? There's no recent playbook here, so it'll be a first in a while.
Mhm. Then Ionic Digital's direct listing, the structural signal on whether the miner to data center pivot has real investor appetite.
And of course, the emerging theme, the biotech pipeline. We've got six names behind Scribe, all watching that strong performance, ready to move forward. So we've got 2 or 3 weeks left before the annual August lull sets in. Let's see who moves.
Yeah, so that's it for this week's winners and losers. Get the full newsletter in your inbox by clicking the link in the description. Thanks for listening, and before we go, please listen carefully to our full disclosure. This podcast is for informational purposes only. Renaissance Capital statements should not be considered investment advice or a recommendation to buy, sell, or hold any particular security. Certain of the statements contained may be statements of future expectations and other forward-looking statements that are based on Renaissance Capital's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements. Past performance does not guarantee future results. One cannot invest directly in an index.